Chinese car imports are driving South Africa's largest bilateral trade deficit. New data shows the country ran a 136.6 billion rand gap with China in the first 9 months of last year, as nearly 375,000 vehicles flooded the local market. Chinese brands now account for almost half of showroom sales, piling pressure on a local motor industry that supports about 460,000 jobs. Imports surged 30% year-on-year, with calls growing for government to push China to assemble vehicles locally, as manufacturers warn jobs are at risk. Meanwhile, Labour has warned that those import pressures are already costing jobs. Trade Union Federation COSATU is calling for urgent, long-term solutions to protect workers in the motor industry. That's after vehicle retailer Motors retrenched 86 employees, with hundreds more affected by changes to pay and benefits. Unions say cheap Chinese imports are intensifying competition and putting severe strain on local retailers and manufacturers. COSATU has urged government, business and labour to accelerate talks on the master plan, including measures to protect local production, reskill workers and push foreign car makers to manufacture vehicles in South Africa, not just import them. ActionSA has accused the government of national unity of executive excess. That's after cabinet ministers spent nearly R500 million on travel and accommodation in their first 18 months in office. The party says ministers have already raked up almost 450 million rand, with the total expected to climb above 500 million once all parliamentary replies are finalized. Big spenders include human settlements, water and sanitation, the presidency and several overseas trips by senior ministers costing millions of rand each. ActionSA says the spending reflects a culture of waste and evasiveness and has renewed calls to cut cabinet perks and scrap deputy minister posts. The party argues that South Africans cannot afford luxury while unemployment remains high. Tiger Brands says it is operating in one of the toughest food markets in years. That's as cheap arrivals, retailer houses, house brands that is, and aggressive pricing squeeze sales and profits. In its latest annual report, the maker of Jungle Oats, All Gold and Oros says shoppers are spending carefully, while powerful retailers are demanding lower prices and more promotions. The company has warned that private label products, including premium ranges, are increasingly competing directly with established brands, putting pressure on volumes and margins. Despite the challenges, Tiger Brands says its turnaround is gaining traction, with revenue and earnings up as it sharpens pricing, cuts costs and shifts its focus toward affordable, convenient food options.